everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. Now, if you're used to watching these shows, you probably are looking at the screen thinking, what happened to John's charts, right? We're actually looking at the E-Trade platform, and what we're looking at is the IPO launch of Snap, S-N-A-P, that's Snapchat. And we don't very frequently get our hands on the psychological aspect of an IPO open, and a lot of folks may not have even ever traded an IPO open, so it may be interesting regardless, and I thought it would be kind of a cool thing to go through and take a look at something a little bit different to spice things up. So first of all, Snapchat's IPO, if you haven't really looked into it, Snapchat's IPO was priced yesterday in that $17 range. Then we load in and we open up today at $24, right? So right off the bat, there's a big difference between the actual price that it was set at 17 and the price that was physically traded at the first print of the day. Now, this is a 1-minute chart because we don't have any other days to work with, right? This is the first time this is ever traded. So because of that, we have to zoom in a little bit faster. But we can see that big disconnect in the fact that, well, they tried immediately snapping lower. You'll notice that wick at the bottom. They tried getting a little bit of a bearish drive down, but inevitably ended up closing right on its highs. And that first candle, this is the first candle that this market has ever seen, right? This is the first 1-minute candle of Snapchat. Now, this bullishness is very, very strong, right? Closing near its highs, lots of bulls wanting to buy this. If we look at the volume at the bottom, we can see that the volume on this one, we're pushing into that 4 or 5 million volumes in shares in 1 minute, right? Just like that. All of a sudden, there's 5 million shares that just changed hands. So with that amount of bullishness coming in, we see good continuation, and arguably buyers will buy that first candle of the day. Now, that first candle really sets up a good move to the upside. We get nice continuation for the upward swing and a really good return for buyers who bought that first move. Now, if you weren't lucky enough to, to be able to load this up right when it opened up, because again, nobody really knows when it's going to open up. They open up seemingly at random times. This one opened up at 11:19. So with that kind of strange open, a lot of traders may have missed that first little bit, so they're waiting to get back in. We see selling pressure coming in, nice bear candle off the highs, probably buyers taking profit, and then a big old bear candle with a huge amount of wick on the bottom. And notice where it came down to, right? It couldn't breach that second candle's low, and then we go into a doji, a bear candle, bear follow through, and notice where all of these lows are stacking up, all right inside this area, right? This whole zone is now being seen as a massive buying opportunity for buyers to try to get another run up towards the highs. So we have the bar one potential trade, and then we come into that massive area of support, and we finally get a strong bull candle, little bear failure inside bar, and then the breakout, and buyers swarmed into the move. Arguably, you could buy that at the market or buy above this one for the continuation up. And regardless of where you entered in, even if you entered in on the pullback, you're looking for a high test once again. Now, that high move that we had here, you can see as soon as we started testing that highest close in the area, we found some wick resistance there, and we put in a little bit of a ceiling. 1, 2, 3, 4, 5, 6, 7 top, right? A sept top. So with a lot of resistance there, buyers are obviously taking some profit, and sellers may even be trying to accumulate a sell move to get the move going down. Maybe they don't believe that this IPO is worth this much, and they're trying to sell the drive lower, but well, we broke out of it, right? So with that breakout, all of the sellers that were trying to sell here, guess what they're going to want to do? They're not going to want it anymore, right? They realize they're wrong. They think, oh crap, here I go. I'm selling the bottom of a move, right? I'm selling the bottom. No, it's not going to go any further. I need to get out. So we get that big breakout candle, the market pulls back, allows them to get out at break even, and likely they probably reversed given the reaction, because that candle closed right back on its highs and led into another nice breakout up. Now, we finally get a halfway decent correction, and what I mean by that is consistency, right? Consistency on a correction is important. This is not much consistency, right? This is just kind of ugly noise. This one, though, we have some nice pullback to the market. The buyers start picking it up. The sellers try again. Buyers pick it up again. And you can see this back and forth battle, but notice who's winning and who's losing. The sellers had a nice run lower, right? They had that good run down. Nice 3 solid candles back to back. The buyers show up, take back one of those candles. The bears try it, they nullify all of the buying pressure, but then where did they go, right? If the sellers wanted this, why couldn't they trigger in underneath that candle? Well, probably because all of the sellers that were selling at the highs are now exiting and they're not interested anymore in trying to get the move down, especially given the failure from earlier. And notice where all of this back and forth is happening. We get a strong bull candle back up, sellers try but inevitably fail, lots of weak bears close above that level, and it's off to the races once again for a big spike to the upside. Now, at this point in time, we're going on, a decent amount of time into the IPO launch. This is when the euphoria starts kind of going out of the picture. Everyone's all pumped up. We got Snapchat finally launched. Hurrah, right? They're jumping all over the place. And then they realize, okay, well, I've taken X amount of trades. I'm in this position. I'm in this. I got to figure out what I need to do. And things go to sleep for a little while. Now, chances are this isn't going to be the end of the move. We're likely going to see some nice continuation either up or down. But either way, this is the lull that you expect going into the lunchtime session. Traders are trying to figure out what they need to do now after all of the trades that they've probably taken. So very interesting. If you haven't seen an IPO launch before, I thought that would be a really cool thing to kind of highlight. Not very often do you get to trade one of these big ones, right? There's IPOs all the time, but a big one like Snapchat only comes around every once in a while, in a really good combination of both market psychology and technical analysis. Even on a hugely fundamental day like the IPO's open, you can still pick up on some really nice setups if you're paying attention to the psychology and the technicals. So that's going to do it for this one. Hopefully you found it interesting, maybe a little bit useful, something you can add to your repertoire. And for you stock traders, maybe you had some fun on Snapchat today. Outside of that though, play it safe for the rest of the day. It might be kind of an interesting one, and we will see you all tomorrow. Have a good one.